A shocker of a monetary policy decision, at least from a market's perspective. Contrary to what was being expected, the Monetary Policy Committee decided to pause on its interest rate cut cycle, and they kept the repo rate unchanged at 5.15%. The committee, however, did maintain an accommodative stance and said that this stance would be maintained for as long as necessary. They also said that they do see scope for future action should the data warrant it. At this point, they want to see both the growth and the inflation data play out before they decide on the timing of the next cut. But none of that was enough. Markets were shocked. Bond markets certainly saw a sharp jump in long-term bond yields as a result of this pause. Now, what backed this pause is perhaps one of the toughest macroeconomic conditions that we have seen in a while. So the MPC was forced to cut its growth forecast even further. Last time around, they cut it to 6.1%. This time around, they've cut it to 5%. Over the last 12 months, they've cut their growth projection from 7.4 to now 5%. But they have acted on that preemptively, as Governor Shaktikanta Das said, by cutting rates by 135 basis points. What they are acting on now is new information coming in on inflation. And they have raised the inflation projection for the second half of this year to 5.1 to 4.7%, and then 4 to 3.8%. In terms of messages on both growth and inflation, I think on growth there wasn't a new message. The concern continues to be the fact that fixed investment formation is very slow and government spending is supporting the economy. They acknowledge that consumption spending on non-essential items has also declined, but they hope that monetary policy actions and actions taken by the government will help growth at least stabilize and then rise in the second half of this year and then the first half of next year. On inflation, though, their assessment is that this spike in inflation is not temporary or only linked to one commodity like onions. They do see other food prices such as milk, etc., starting to see price increases, and they also see some upside risk to core inflation due to things like these telecom tariff hikes. And the committee, in its judgment, has decided to wait and watch to get more information on inflation, perhaps before they decide on the timing of the next rate cut, if that is to come. Now, Governor Shaktikanta Das was actually very emphatic in his press conference this time around, perhaps one of the most emphatic press conferences he's given since he took over almost exactly a year ago. And he said, look, we don't want to keep cutting in a mechanical fashion. This is a temporary pause. We want to take more action if required by the economy, but we want to take it at a time where it can have the maximum effect. So that was sort of the key message that was coming out from him. There was a lot of concern in the market that the market rates are still not transmitting monetary policy action. Governor Das said that that is not the case, that monetary policy has transmitted through most of money markets, and they do expect banking transmission to also continue from here on. There has been the issue of term premia, which is short-term rates being low, but long-term rates like the 10-year being high, and the fact that companies continue to pay a very high spread over government bonds to borrow money from the markets. When Governor Das was asked about that, he said, look, we had a long discussion in the Monetary Policy Committee about this, but he said that we are watching it closely. When he was asked whether they are open to something like an Operation Twist, well, he laughed and he said these kind of things are not announced.